IATA's Airline Profitability Outlook without hesitation, repetition, or deviation starting now. The IATA Airline Profitability Outlook for 2024 projects a cautiously optimistic financial recovery for the airline industry, reflecting substantial improvements in profitability, revenue, and operational efficiencies. IATA expects net profits for 2024 to reach $30.5 billion, up from the $27.4 billion in 2023, with a 3.1% net profit margin. This is notable progress, though it remains below the industry's cost of capital, which sits at over 9%. Operating profits are forecasted to hit $59.9 billion, a 14.7% increase from the estimated $52.2 billion in 2023. However, the return on invested capital is anticipated to be 5.7%, still trailing the capital costs, signaling ongoing financial challenges despite profit gains. Total industry revenues are expected to reach an all-time high of $996 billion, up 9.7% from 2023. Passenger revenues, which are a significant portion of the revenue pool, are projected to rise to $744 billion, driven by a 15.2% increase from 2023, with passenger load factors reaching 82.5%, similar to pre-pandemic levels. Air travel demand remains resilient, with IATA polling indicating that 39% of travelers plan to fly more over the next year and 46% expect to increase their travel spending. Passenger yields are expected to improve by 3.2% over 2023 levels, and in adjusted terms, the average return airfare will stand at $252, maintaining affordability relative to pre-pandemic fares in 2019. The cargo sector, in contrast, is experiencing a market correction after its pandemic highs. Cargo revenues are forecasted to decrease to $120 billion in 2024, down from the $138 billion in 2023, and significantly below the 2021 peak of $210 billion. This decline is attributed to lower yields, which are expected to drop by 17.5% in 2024 due to increased belly capacity with the return of passenger aircraft to service. Cargo demand, however, remains strong, and 2024 air cargo volumes are projected to reach 62 million tons, reflecting the critical role of air freight in global trade, valued at approximately $8.3 trillion. On the expenses side, costs are expected to rise to $936 billion, a 9.4% increase over 2023. Fuel expenses remain a central concern, with the average jet fuel price anticipated to be $113.8 per barrel. The fuel bill, comprising 31% of operating costs, is forecasted at $291 billion, exacerbated by a 30% crack spread for refining crude oil into jet fuel. Sustainable aviation fuel production is estimated to meet only 0.53% of global demand, adding $3.7 billion in costs, while carbon-related costs under CORSIA will contribute an additional $600 million in 2024. Non-fuel costs remain steady, with labor costs forecasted to rise by 7.6% due to increased volumes, bringing the industry's employment total to 3.07 million, slightly above 2019 levels. The airline fleet outlook for 2024 reveals ongoing pressures from supply chain delays impacting new aircraft availability. Total flight inventory is expected at 38.7 million, which is 1.4 million fewer than projected in December 2023, due to slower than anticipated deliveries. Only 1,583 new aircraft are expected for delivery in 2024, which is 11% less than originally planned, at 1,777, resulting in airlines adopting larger aircraft as a strategic response to these delivery shortfalls. In conclusion, while IATA's projections highlight a strong path toward profitability, the industry continues to face cost pressures from high fuel prices, sustainable aviation fuel constraints, and supply chain challenges. Nonetheless, the steady growth in passenger demand and controlled labor costs position airlines for a gradual financial and operational recovery, laying the groundwork for future investments in sustainability and competitiveness in a post-pandemic environment.